Hi, this is Randy Finney with the Right Side of the Chart, and today is Friday, July 26, 2019. This will be, we'll just go over a few trade ideas here, sort of an eclectic mix. I've spent almost the entire day, other than answering trading room questions, sharing couple trade ideas, is just pouring over the charts. Now remember, we are in the thick earnings season, so when you're trading earnings seasons, like navigating a minefield, some stocks more so than others. Some have the potential for big moves, even big mega caps. Alphabet today is a good example, a 10% gain. So it's not only your smaller stocks, but again, typically you can, and what I always say is look at a chart. A lot of charts you can put up the earnings date, a little marker on there, but when you look at stocks and you see these gaps every so often, those are usually earnings induced gaps. So then you can kind of get a feel for which stocks tend to gap up and down, and also how volatile are the stocks. So keep that in mind. And then, as I always say, go to the right side of the chart support center. It's under resources. The resources link on the top menu. Click on under tools of the trade. Click on earnings whisper or earnings calendar. It'll bring you to earnings whisper. Earningswhispers.com, and at the very top there's a search bar. Just type in your ticker symbol and you'll get the earnings date. So I'm going to cover a lot of these as point out there are earnings, so you want to wait till that's out of the way. So for example, this one reports next Tuesday after the market closes, and I highlighted this recently as a potential trade idea. It's Grubhub, and you can see on here, let me pull my drawing tools down. So you had that nice, divergent low right here. It says it back here. You did have one there, and you had a nice rally from that point. But this was a divergent low right here, a much larger divergent low. The stock broke out. You can draw alternative trend lines, one there, and it seems to be stair-stepping up. These little consolidation, flagging type action. But here's what I see on this one. That was a big level, 73.33. We broke above it, and we've been back testing. If it weren't for earnings, I can tell you this right now. I would add this as a long trade setup to be triggered on a breakout above this downtrend, this minor downtrend line right here. I wouldn't even hesitate. A lot of things I like on this chart. Now, earnings can foil all that. They have the potential to, but one of the things I like is a PPO signal line, the 9 EMA, the white line, which is the last of the two to cross, does a great job of defining trends. When the white line there, the 9 EMA is above the zero line, as it was this entire point, the trend is bullish. And when it crosses below and remains below, the trend is bearish, as it was throughout this time. Cross back clearly above there recently. And what happens is that zero line often acts, as you can see here, support when tested from above once you break above it. So you have the PPO coming back in. It's not there yet, the signal line at least, but it's above there. And the RSI 50 level, the midpoint, often acts as support and resistance as well, defining trends, and you're down around that 50-ish level. So there's a lot I like in this chart, but what I don't like is earnings. You want to gamble, go to Vegas. Sometimes I will take positions in front of earnings, but usually keep it relatively small, and it all depends on the stock and really how strong the chart is. So there's one to watch, and here's the takeaway. If you get an objective entry once earnings are out of the way, it pops above there. What would be objective? Any move, somewhat above, maybe even above the recent highs right there, which come in, where I'll show you. Let me draw them. The recent reaction highs right about there. But once you get closer, this is my next target there is 82.30 or so, and you get close to that, it's not so objective anymore. However, if it pops above there impulsively, ideally on some consolidation, if it gets there first, then 95 would be the following target there. So that's just one, what I call a trade setup. It's only actionable right now if you're a gambler, and even then, if you want to take it before earnings, you're better off to see that minor downtrend line pop there. All right, so that's one of many. Let's talk on coffee and wheat real quick. Let me pull up the chart of wheat futures. I keep getting a lot of questions. I'm not seeing what I wanted to see so far. I'm seeing a little bit of what I wanted to see on wheat futures. If you've seen the recent updates, we had this breakdown. I said at which point that had the potential to be a false breakdown or a bear trap, because we would put in a divergent low, which we did. However, ideally, once you see this, because you have that false breakdown, aka bear trap, you want to see impulsive buying. We started to see it. it was looking good here, but I wanted to see a little more, and I said that at the time. That's why I didn't add it wheat as an official trade. I'm still watching. So we've come back to test that. That's just, it's weak price action. It's not ideal. I'd rather chase it a little bit higher price to see some impulsive buying. Let me think, or show me that a lot of shorts got trapped in. They're getting squeezed out of wheat futures. But right now we're back to support. So I'll say this: if you took it or you're in it, it's still objective. It's still above that 492 level. And so it still could very well pan out. Let me see if I can add a downtrend line there. Yeah, we could start to have the makings of a downtrend line. So I'll keep it simple. Still on watch for an official trade. Still looks okay now, but not great. So that's that. All right, next one up. Oh, and if you don't trade futures, that would be the wheat ETN. And here's the story on the wheat ETN, and I said this on coffee too. A downtrend is simply defined as a security making a series of lower lows and higher lows, and that's a downtrend right there. An uptrend is defined as a security making a series, well, you'd have to look at it this way, of higher highs and higher lows. This one not as clear as coffee so far, but we're still well off the lows. We caught the bulk of this breakout on the bullish falling wedge pattern, but it's not showing me anything yet, any solid signs of reversals over. The PPO is starting to curl back up. That would help to get a bullish PPO crossover. So again, just one on watch for another potential trade, official trade. Coffee, as I said on JO, same thing. We've had we took the breakout here. We've caught all these moves up to this third target. At that point, I posted an update that very day it was hit, saying, look, the odds for a pullback and a correction are pretty good off this level. It's a good time to take some profits, especially if you're an active trader, but I left the long trade on, the long-term trade on. This is that long-term trade target. That was really pretty much my uppermost swing target. But as of now, this has all the makings of an uptrend. It's making a series of higher highs and higher lows. But we need to reverse before this low to keep that definition of an uptrend intact, and then start to move up here. So right now, that's really, it's not showing me any signs of reversing yet. PPO still above the zero line. We'll look at coffee futures real quick if I can find them down here. Okay, maybe coffee is, it's looking a little more interesting. Yesterday I had mentioned this downtrend line here in an update, and let me try to put it back where it was, and set a break above there, and I showed two arrows. I said, look, we can break out above now, and a breakout any point would have triggered a long entry. But I showed another arrow coming down here. What happens when you get close to a pretty well-defined support? It's usually, my experience, like a magnet. You get close enough, it's like a magnet or a black hole, the way a black hole will draw everything in, including light that gets near it. That's the thing with a pretty decent support level. So I had a little scenario that we could break out before, but if we jog down here, we're at that nice support. That's 99, we'll call it 99.50 or so on coffee. PPO wants to curl up. Looks like it's poised to make a bullish cross. Last time we were this oversold, we were oversold here. We had a nice pop. And then we go back here. See, each of these oversold readings, you at least get a tradable pop, or at least you have in the past. There's no guarantees. So now you're at support with the trend line starting to go, but coffee stops trading during the afternoon, and we'll pick up I guess Sunday night. So that's one to watch. So it's not like I said, it's really stretching the upper, not the very limits, but it's stretching where I wanted to see this pullback correction go. I mean, there's our previous reaction low. It could certainly come in, and if it does, if it breaks 99.50 and gets down there, I'll look at it at the time. But like I said, so I'm warm on coffee, but not hot on it. It needs to start, it needs to start showing some bullish price action. Break out of here, get back up here. Next resistance target will be that former 105 support. Needs, take that out, and then ultimately take out that previous high. That's where we, we're able to close out, or at least, I mentioned an objective place to book profits and recycle back in on a pullback. That was when T3 was hit on the JO trade, and it was also pretty well-defined resistance on coffee futures at right around 116. So that's one to watch for next week. Okay, next up LB. I mentioned this one recently as a long trade idea. Nice, nice wedge, falling wedge, divergent low, everything you like to see. Just like you had a divergent low here, and that led to that. What was that 43% rally off that divergent low? We had a divergent low there that was double digits as well, and so far this one's been good for up to that target about 28%. So that's the story on this. You can see the lines 24.94 so is support. It's pulled back there. I can't remember exactly where it was when I last mentioned it, but it's held that support and needs to now break above 28.05. So the objective entries on this one, if you're wondering, okay, well, first would have been a breakout of the trend line, breakout back test, then a break above 24.94. That was an impulsive red green candle through it, confirming the breakout. And now at this point, you either buy pullbacks to support, which is done twice, 24.94, or you wait for a breakout of the 28.05 level. And if you bought at 24.94, you can swing up there, take profits, or just ride it out. Next target would be 30.77. A couple more in the industry. That one, by the way, reports August 21st. I have another apparel store I shared was Cato. I think this one's reporting soon. Let me plug it in on another monitor here. Cato, August 22nd. So you have a little bit of time. This one's had this flagging type action going that's sort of been foiled, but it's above the breakout point. It's consolidating nonetheless, and so there's the next target zone up there on Cato, and that would be, if it can start to gain some traction, about 10%. It's hard to say. It's got almost a month to go before they report, so if it can get some upside momentum, it could hit that target before then. Otherwise, most stocks tend to go into a holding period just before they report earnings. CBDS mentioned as a setup here, long setup, pop there, hit that first target, pulled back, back tested, pop. It's back testing again. Now I'm mentioning this one now. It's a more speculative, lower price cannabis stock, but I put on the MJ trade that today. I like MJ as I've highlighted this one recently, but said it was too early. I was waiting for it to come down closer to this 2809-ish support, so it's there. So this is a case where there's usually two areas or two places I buy stocks long. I either go long on a pullback to a well-defined support level if I expect a reaction off that level, and or I wait for a breakout of resistance, in which case would be this downtrend line, which comes right around the first target. I put a little asterisk there. First target would be the first to be hit, whether it's the downtrend line or the 30.09 level. In fact, I set that a little below the actual resistance line there. I usually turn these off to not confuse the official trades. So there's another one for you again, but that had a front page post, so you probably already caught that. I mentioned this one in the trading room today. I had a price alert on it, but I was working on the MJ update. It popped and it was still, it gapped up pretty good. You can see from yesterday it gapped up here to open around 1030. That was about a 7.5% gap. And so what I said to somebody in the trade, I posted it. I usually, if I miss a trade, I don't post it. There's nothing, does nobody any good for me to say, oh, here's a trade that I would have took after the fact. But in this one, what I said in the post is, look, if it comes back in, maybe backfill of today's gap, possibly even a back test to the wedge. There's also some price support right above there. So in other words, a pullback to either of those areas would offer an objective long entry, depending on how the charts look. This was earnings induced, of course. I believe it was. I thought I already checked that. Either way, so there's the gap right there. There's support around at 989 plus a downtrend line, or you let it consolidate. I said the other thing would ideally some consolidation. It's already pulled back. It had a momentum fueled overshoot of my 1106 target and then pulled back, hit the 200-day moving average. So if it can power back up, and again, ideally after some consolidation, again, it was a constructive chart here. Divergent low, break out of the downtrend line, and then that would trigger the next long entry for a run up to about the 1250 area. That's VGR. It's a tobacco stock, by the way. And I also want to say this, that the MJ is not just cannabis stocks. They have a lot of the tobacco companies, which, as you guys probably know, tobacco companies saw marijuana as a big threat, so they've taken pretty good stakes, just like the alcohol industry, the spirits industry has done in a lot of those cannabis companies. So I don't know if VGR has any hand in the cannabis sector or not, but I just wanted to point out that if you start to see momentum in the tobacco stocks, that should help the cannabis stocks at this point. All right, next, is this PYX? Yeah, here's one. I have to check earnings. It's another tobacco stock. I went through, if I see one moving, I'll check the sector and look for any that stand out. So I see some decent, it's not super well defined, but pretty well defined support around 1237. So that's objective long at or around the 1237 level. And you can see resistance here about 1389 plus a downtrend line, a similar wedge. And that line's all moved where it shouldn't be. But there's your positive or bullish divergence there on PYX and other tobacco stocks. You may want to check that one for earnings. I probably should give you another target. I didn't really mark this chart up. There it is, 1626 next target, 1932 give or take. I may sharpen my pencil on that one. Let me move it down a little bit. Let's just focus on those for now. If we start to get some traction in the tobacco stocks, then I will, again, I'll hone in on these targets a little better. I'm just kind of throwing these out to you guys. Take them if you like. Check earnings. GNC, I'm considering this one as a long-term trade, a bottoming play. This is a daily chart. Divergence looks real big here, but it shows better on the weekly. Here's a downtrend line popped above impulsively today, and I don't see a lot stopping this stock. There's a little bit of resistance here, but I see a good shot it can run up here to 281. That'd be about a 37% gain. If so, this is what it looks like on the weekly chart. Big downtrend line, big bullish divergent low right there. It's been moving up impulsively so far, and so it has its work to do, but these are all targets, that downtrend line, and then each of these levels here. Let's just say at this point in time, if it breaks out anytime soon, I would favor a move up here to the 450-ish area and then get out, maybe regroup, see how it looks from there. But I'd expect a considerable reaction if and when it got there. And if it does, that'd also be a gain of about 115%. So you might want to book profits if it gets there. Again, I'll watch this one. I have to scrub it for earnings. Some of these I haven't scrubbed yet to see when they report. It may already be out of the way. May not. Tenet Healthcare, well, since I put this one on my list, I guess it's already started to move, and it's already too close to my first target to take. Was the breakout right here of this downtrend line. It occurred today. It's too close to my first target now, but you want to watch it maybe on a pullback. Maybe if it can power on through there, you can see some additional targets there on THC, Tenet Healthcare. Beautiful divergent low, nice divergent low. Same stuff I usually highlight. Big divergent high, super well-defined trend line. That led to this huge drop. Right here you had another nice clean trend line, bullish, a bearish rising wedge, another big drop. And now it's just come full circle with a nice big divergent low and time to rally. That's THC. Next up, Mac. This is a biotech. That's not Mac Truck. It's Merrimack Pharmaceuticals. Breakout starting to run today. God, man, a lot of these are running now. Either way, there's a breakout. I have to check it for earnings. You got to have a gap to contend with right here, but I think it could work its way up here to about that 744 level. It's a biotech. I always urge caution. Biotechs keep small position sizes. They can gap against you pretty mean. It's about a 19% gain if it gets to that 744 level. DF, Dean Foods, breakout here, back test recently, nice divergent low right there. Potential bottoming play. I may add this one on as an official trade, even a long-term trade. Needs to pop above that 129, 130 level, and not just intraday. It tried to pop above there, so it needs to take out 130 with conviction. Either a very impulsive intraday move on above average volume. See, the volume right now wasn't that impressive today, so the breakout failed. And if so, $2 would be the next stop, and that'd be a pretty nice run. Low price stock, you don't go with a big position size, but you don't need to. You get 55% on your money. You can do a quarter position size to account for the risk. When a stock drops below $1, bankruptcy is always a possibility. I haven't read or done any due diligence on this. I've traded this company many times in the past, not for a while, but you want to do your due diligence because you could wake up one morning to see the stock gapping down because of rumors or an actual bankruptcy filing. So that's where the whole risk reward position sizing thing comes in. You take a fractional position, much smaller than you might normally take on something like SPY. This one, well, I guess it was diverging. There's no divergence. I haven't updated this chart. Well, yeah, there it is. RSI divergence. Reversing pretty hard here. It's usually bullish too when a stock breaks below $1 and then recovers it. Companies will fight to keep their share price above $1 because they face a delisting if it trades there too long. So speculative, but it, chart looks good, so I'll pass it along if you guys like it. OMI, Owens and Minor Company, medical distribution, strong divergences forming. It's low price stock, but trying to pop above this 268, 270 resistance. If it does so, watch for a break of this downtrend line. That would trigger a buy signal as well as a break above. There's a reaction high a little above that, and I'll put a level there. But I have a resistance at 327, and then again right here at about 356. And that could spark a rally in this one. That's OMI. Again, more of a speculative low price trade, but that's where the big gains are. That's where you get your high double digits and triple digit gains or losses, so be careful. And again, how to do it, if it fits your, if it's your cup of tea, just take it, but take a very small or much smaller position size than you might normally. ADP, this was mentioned in the trading room as a potential trade idea. It hasn't met the, still not meeting the criteria for an official trade. That's where they often start. I'll throw out something in the trading room, I'll watch it for a while. And here's the thing, they report on, what is that, the 31st, next week before the market opens. So what it was is we had a breakdown here, impulsive too, and that's when I pointed it out. And we've been back testing, almost perfect back test. You can see us crawling up the trend line right there from below, back testing, back testing, back testing. So wait until they report. If the things, if I see something in the chart I like, I may add this one as an official trade after they report. Depending on what happens, of course, we'll watch it. Maybe they pop up another test of the divergence line here, fall back down. PPOs above the zero line, like to see that get down below. That usually, again, denotes a bullish trend. You take that dotted line, look at the white line there, which is the PPO signal line, and you can see just how well it does. It says bearish trend here, back tested, failed, and at this point said go long, stay long up until here, long, long, short, long, and you can look above. And again, I don't use this as a buy or sell indicator. It just helps to confirm the primary trend. So that's why, again, this is one reason it's not yet an official trade, but let's see what happens if it can get rejected here off the back test, if these divergences stay intact. And it very, very easily has the potential. In fact, I'd almost put odds on it that it'll pop to a new high and just put in one more, extend the existing divergence right there, pop to new highs, then reverse. So that's something you might want to look for a potential sell signal on ADP. All right, next up would be BYND. I covered this in the trading room. What I'm watching on the daily chart here, you guys might have heard of this one, Beyond Meat. They make the veggie burgers that are, my nickname for this stock now is Beyond Overvalued. But with that being said, overvalued is not a reason to short. But there is a doji candlestick forming. Now, that is not a sell signal. That is not, in my opinion, it's a potential topping or reversal stick, but what you need, it's only potential. You want to see some follow through next week or Monday with a big red candle, especially if it can close down below there, or maybe even go up. We pop on earnings, I could see that, and then engulf that candle, and even the previous one, that'd be all the better. So it is what I call a trade. Like a lot of these, I'll tell you if it's an actionable trade or a trade setup. Big difference. This is a trade setup. So we want to see that, and then there's this uptrend line as well, which would trigger a more powerful sell signal if taken out. Something I mentioned in the trading room, see this big volume bar today? Let's go on to that 60-minute chart. In fact, let me pull the chart I posted in the trading room here. Okay, so this is, and they were only about less than an hour ago, so there's BYND. There's the candle. That's what you want to see here if it's confirmed next week. Again, they're reporting on Monday. Big thing. So I mentioned the trading. I took a very small, and that's all I could. Most brokers don't have, or at least Interactive Brokers, who I use as my primary trading account. I use a lot of different brokers, but they have typically the best availability of hard to borrow shares. Actually, they're green barred again. You could short it right now at IB, but keep in mind that it's a heavily shorted stock. But again, it was heavily shorted back here. So I've only once before There's been a lot of bearish talk on, the media and everything else about this company being overvalued, and I could sit here and talk all day long. Fundamentally, I think it is. They don't own the patent on veggie burgers. They just make a good veggie burger. It's only a matter of time before Tyson and some other big companies come in and spice up their current offerings and come in and try to, take away some of the momentum and market share this company has right now. So that's it. Last time around, posted, we shorted it right here. It was a perfect scenario, perfect play out. We shorted right there at that point, and I had it coming here, bouncing off that level, having a reaction there, which it did, and coming right down to this uptrend line, which it did, and that was for a 24% trade. Since then, I stepped aside. There's no reason to short it. Nothing I saw. Momentum was up, so we almost nailed the entry and perfectly nailed the exit. I have to say I didn't get a shorted because my broker didn't have shares at the time, but it was all laid out, and at least one person that day said that TradeStation had shares at the same time, so they could have shorted, but they said they didn't want to short it at that time. Here's where we're at today. So that's the chart I just showed you. Oh, here's what I want to show you, these buying climaxes. You can see a buying climax is when a stock, there's two components really. First of all, you have to have a prolonged uptrend. You don't have a buying climax when a stock bottoms and then comes up a little bit. No, it's after an extended uptrend, and usually you'll see a kind of a blow off top, a very strong, almost vertical move, and an increase in volume. I don't know if you can't make out the volume bars, if your monitor quality is not good. Sometimes people tell me they can't see things on these black charts, but there's a big surge in the volume bars there, and right now. In fact, let's go back to today's chart, see if it's gotten any bigger. This is a 60-minute chart. Yeah, you can see it right here. You can see these volume bars. This is a surge. Now, this is going to get even bigger on Monday. So what happens with a buying climax, they're not always a one-day event. Sometimes it's a 1 or 2 day event. You can see right here, 2 big bars on the daily, 1, 2, and then it topped. And from that buying climax, there was a 32% drop. Here's another buying climax. The bar is right where my crosshairs are, much higher than the rest. From that point, it dropped in just a few days, 31%. So this, to me, looks like the making of a buying climax. And you might say, yeah, Randy, you just said it's a heavily shorted stock. Last I checked, the statistics showed about 10% of the float was short. But what happens in a buying climax, by the way, it's not just longs buying. It's short, you buy to cover. This, to me, undoubtedly is a lot of short interest that's just been cleared out, and short interest that will not be reflected in the most recent numbers. Yesterday, the short interest data came out. It only comes out twice a month, and there's a almost 2-week lag time before they even report it. So it's almost so dated, it is dated, that I have to, and I always have had to extrapolate, has it dropped or risen since then by looking at the chart. So by my extrapolation or inference, I should say, looking at where it was last time, and with this run-up, that was undoubtedly shorts being squeezed out. Obviously, there was natural buyers in there too. I'm not saying it's all short covering, but you have to imagine anybody who was short all along here feeling the pain and started to see this lift recently, that's a lot of shorts getting cleared out. That sets the stage for the next drop. So therefore, I'm looking for a reversal. And like I said in the update on that chart, this was the trend line I said needs to break, but then I followed up with this trend line and actually put that in the trading room. I followed up with this chart right here. There it is. This is 2 minutes ago. This was taken at 1:58. So the 2 o'clock candle actually, So just before 2 o'clock. So that was a bearish engulfing candle right on that minor uptrend line. And so if we follow down through there, let's see where we're at now. Go back to that. So far, yeah, we broke it and we're back testing the trend line from below. It's a minor trend line. And again, earnings tomorrow. We still have 45 minutes left to go in the trading session, so can't make too much of it, but it's a start. But again, earnings has the potential to foil everything. This stock, only thing I'll promise you, this thing's going to gap up or down on Monday after they report. I think it's before the bell. So again, that's where I wouldn't take a heavy position until then. I'll have a little starter position and may increase that a little bit, and then I'll wait to see what happens, whether we get a big spike on Monday that's faded. If we get a big spike up here, that in itself is not an objective short, but if you get a big spike and all of a sudden it's faded hard and you see the makings of a big red candle that may engulf this, then you can jump in. And then of course I showed you the other levels to watch. So let's move on to the next one. That was BYND. Let's talk about Intel. Intel was interesting. I showed you the Intel had a big turnaround. I don't have the intraday charts right here, but if you look at the overnight session, Intel had a huge round trip, over 10% gain, wiped out, faded. And that was what I said in last night's video. Do not react or assume that the initial reaction following earnings is the lasting reaction. Let the dust settle. Let the conference call come out. Let the company give you the guidance and tell you all the other tidbits that are going on with the company, because it's not always about the numbers. And even then, they might come out sometimes with rosy guidance, blow away the numbers, and whatever reason, supply and demand, the forces of supply and demand, which ultimately determine whether stock goes up or down, they take over. And that whatever reason is, if you have more sellers than buyers in the stock, it goes down. So this is what happened. I pointed Intel out in the recent semiconductor video. I believe was covered in that video. And if not, yeah, I mentioned somewhere recently that we have this huge gap, whether it was a trading room or the front page, massive, massive gap here. And the other day we came up to the gap. We tried to enter today after earnings, but got rejected. So this is a failure at resistance so far with some big red candles. And we'll watch this one. All I can say, you know, it's objective, especially once it failed there and failed to stay within the gap. You could shorted it and you still could have a short. You don't have to worry about earnings anymore on this one. Doesn't mean it can't gap up against you, but you know, you short it just under 53 with a stop just above. Maybe for a pullback to at least this trend line or this level here. I'll follow up on this more, because I recently did the video on the semiconductors, and remember, this is the largest semiconductor company. There's some big ones out there, but Intel is the leader, and it could set the tone for the sector going forward. So certainly one to watch. Could be a potential shorting up in itself, and I've already shared with you my long-term targets on this one. Plenty of downside to go if that plays out, and dropped about 32 and change. That's Intel. So kind of just watching it right now. See how, let the dust settle. You know, just reported last night. Let's see how it follows through next week. LXU and the chemical sector. I just did a video on those. This beauty has come up. I can't remember where I posted it, but it just continues to roar. And has now hit my first target, 404. It's going to report. I told you all these stocks are reporting within the next couple weeks, or at least the four or so I highlighted. But there's LXU at resistance now. So if you have it, actually, yes, looking at one account, I do have a position in a SEPI around that. I need to make a decision whether to ride out as a small starter position. I'm thinking to myself now, I shouldn't do that in the videos. Yeah, I may just hold on to that and ride that one out and shoot for a pop-up here at about $5, since it's really not small enough to risk giving any buyback. I won't add to them. I want to wait to see how at least the first few of these report. Let me find the other ones that I showed you there in the video. EMN broke out 725. So it looks like they didn't like the earnings, but guess what? It came in and it back tested, and it's just below, but it could easily recover. So I'm going to view this. I'm keeping an eye on this for an official trade, especially if the sector gets some traction. Remember, breakout, but it broke out right before earnings. So what happened? It got smacked down. But sometimes that gets all the bad news, all the sellers out of the way. If it can recover this soon, that may just be an overshoot due to earnings of that trend line. And then if it holds it, 80.40 is my next target, and then if that gets cleared, 95.50 or so. So there's still potential there. And again, they're all starting to report, so the tone will be set going forward once they all get out of the way. Here's another one, August 9th after the market closes. It's already broken out of this pattern, but again, they're most of them are in a holding pattern right now, other than that that LXU, HUN. July 30th, so that's next week before the market opens. And again, there was a video done on this. You can check that video out, and I'll go over these, but I'm showing you the chart patterns. MEOH, another chemical company, July 31st after the market closes. Beautiful little bullish falling wedge, no buy signal yet. Earnings coming up, but if it pops, and as long as it doesn't run too close to this first target, you might get an entry on it there, and maybe if it goes there and pops above it, runs up to the next one. We don't have strong momentum in the sector yet. These are a lot of potentially bullish charts that are setting up, and that's why I'm showing you this. This one, again, a lot of these are not going to go far on the breakout. At least, well, that one of them did. I have a little starter position I said I took in this one as well. That's underwater now, and that's fine. I'm just going to wait till they report and give it a little room, and I'll either get stopped out or I'll add to this position, and you can see the targets there. That's not so that's a potential long-term target, but right now I'm looking if I can get a pop up to about 682. You know, from where we're at now, that would be about 45%. So it's all about risk return. I can give myself a wide stop if I'm targeting, 50% gain. You can easily allow yourself a 15% or so stop. SQM, another one, broke out, back tested. I didn't write the earnings date here. So there's one to watch as well. And again, these were all covered in the recent video. Let me move on, and I think that's it. Let me pause this and check. Long video, but I'm going to fly through a few others. Silver. Silver still, as I said, my very near-term direction is, I think there's probably a little more consolidation to maybe a little more downside. If you're, a quick trader and you're nimble, you can get in here. Silver, broke down below this bearish rising wedge. I mentioned as a trading op there the other day, back testing, hit my target, hit it again. It's hit it twice, and it's coming back down to it. I think that 16,335 is going to go, and if it does, that'll open the door for a move down to my next target there, about 1620 or so on silver. So there's still a potential trading up there, another short trading up. I think there's just a little more downside, and to be clear, I'm still longer term bullish on the metals, and that could change. And the euro and US dollar, they need to start kicking into gear and showing me what I want to see. So right now, like I said, I'm viewing the metals, at least the metals themselves and the futures, more of as quick trading ops. Let the consolidation and the overbought conditions work themselves out, and then hopefully we'll see the next objective long entry for the next trend up. So there's a potential quick trade, and also an up there. All right, finally, two more to go here. Would be crude oil and crude oil. I posted in the trading room. We have a downtrend line to watch on this 60-minute chart right here, setting up a pop above that could bring us up here. In fact, I laid out a scenario. I could put equal odds, no buy signal, no trade, but see these divergences? They're not divergences right now. If crude makes a new low, and a nice scenario would be to see it undercut this 54.77, that's a pretty important support level. It was the bottom of this W basing pattern right here. We broke out. So if we undercut it, you'd probably see a quick big red candle would wash out a lot of stops, below the stops on long, suck in some shorts, and then get a reversal, and that would give us a nice clean bullish falling wedge pattern if these divergences are still intact. So there's a scenario. It'd be ideal. We may not get that. We could break out before then, but that would be a nice setup. So I wanted to throw that out there right now for you in crude oil, CL crude futures, and if it starts to show you a chart of the futures. I'm sorry, USO and DWT. One more, Nat Gas. Nat Gas still has big divergence on the daily charts. This is a 60-minute chart. It's moving lower. I highlighted it the other day in the trading room, saying there was a downtrend line, just like that one I showed you on crude, that if Nat Gas pops above, it would head up here to that these two targets there. Up to through, it didn't. It failed there. So it didn't break out, didn't trigger the buy signal, and it's moved lower since. But it's setting up divergence right now, while there's also, and there has been for a while, positive divergence on the daily. So it is like crude, just a setup. It needs to break that downtrend line to trigger a long entry, and at that point I'd still favor that a move up here to about that 230 or so, 231ish level on NG. All right, let's wrap it up there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.